Good morning, guys, and welcome to today's edition of the London Session Open. Today is April 16, 2020, and it's 9:40 a.m. in London when we're doing this market update. My name is Alejandro Zambrano, and I'm the Global Chief Market Strategist with ATFX, and also the Chief Editor of investingcube.com, which is a financial news site. Let's take a look at the markets as we usually do. We have about 20 minutes to cover all the main markets and also answer any questions you may have. I'm going to try to spend about the next 10 minutes providing you guys with an update on what's happening and some of the key markets, and then the other 10 minutes we'll use them to answer your questions. So if you do have questions, just put them here in the chat box, which you'll see in this little section here. If you don't have any questions, it's always nice to see a good morning. And if you're watching the recording, don't forget to like the video. Actually, you should like the video now anyway, and then leave a comment as well. All right, guys, let's see what's going on then. And we're going to talk a bit about the German DAX and stock markets, because stock markets is where the action is. Currency markets, you do have action in things like dollar, Turkish lira, for example, but you don't necessarily have that in the Euro USD. You even have a bit of action in GBPUSD, but again, it's a bit quiet. I think German DAX, though, is looking, and stock markets in general are looking okay. All right, so this is the German DAX. So the German DAX is now pushed back into just above the buy zone. So a few days ago, we're trading up here, and I said the market is probably going to come down on profit taking, and if it does come down to 10,394, I think people are going to be buying. Now we're in a bit of profit right now, but clearly the entry level here, which I figured out was not really good enough. I mean, it was a bit too high, so we can push this back down a little bit, maybe to improve the risk reward ratio here. So if we do go down to 10,338, then I'm going to be bullish. Now the problem with doing this sometimes is that you will miss out. There's no question about that. We will miss out sometimes, and the market might just go upwards because that bias that is in the market, the bullish one, is still there. It's just that we're adjusting here to improve the risk reward ratio, and as well because the entry was not really very good. I also pushed down the trend defining level a bit because yesterday we had the trend defining level just a little bit higher. That level was never touched, and then but I'm pushing this down here to get this a little bit more of wiggle room. And if we trade below 10,083, which is the level here, I think we can potentially go down a bit lower, maybe to something like 96.39. Let's talk a little bit about the economic data that was out yesterday. You got industrial production, worst numbers since 1946. The industrial production declined with about 5% on a monthly basis. And again, that's the sharpest contraction since 1946. When I read that the first time, I thought, oh, wow, what just happened here? And then I saw the number is 5%. It is important. Industrial production has a high correlation with US GDP, but 5% for me is not huge, but it's definitely a big number. Now, it's also important to remember this. What happened in March? What was stock markets doing in March? Stock markets started out March here, and then they slid by 33% until they found a low here on March 19th, when around these times, I think on March 22nd or so, the US government, the New York decided to lock down on the 19th. California had already locked down. So the numbers out of the US, much like from China, they're backwards looking. All right, those horrible numbers were well described by stock markets declining. Since then, stock markets have moved up, because at this point here, when stock markets were at their lowest, industrial production was probably at its lowest, at least if we follow the path that we've seen in China and many other parts of the world. So right now, stock markets are telling us industrial production is probably going to improve in the month of April. The problem here, as I said many times before, and it's super difficult for me to underestimate, is the second round effects. You know, the fact that people don't work for 1 or 2 months, probably 3 months, how is that going to influence things? Are we going to see bankruptcies, and then these bankruptcies by themselves become something vicious that draws down the rest of the world economy? My view is that we'll have some of that, but I don't necessarily think we're going to have, I don't necessarily think it's going to be as bad as you will see commentators on Twitter talking about. Because as well, don't forget, guys, governments and central banks are doing so much to help the markets. In the long run, is it good that they're giving money the way they are? No, it's not good, because in every economy, there's always a few companies that are not very good that should actually go bankrupt. These companies, some of them are now being saved, and then you have good companies that are even going bankrupt. But the key point here is that the bad companies are kept alive, and that is something that will create problem in the long run. And people say at one point we're going to have no confidence at all in the economic system. We're going to see a free fall. That might happen at one point, but I don't think it's going to happen today, and I don't think it's going to happen just yet. Maybe it's going to happen later, in 15 years, 10 years from now. But for now, governments are doing everything to support, and people are going with it because it makes sense for them as well. So we'll see what happens. For now, the trend is bullish above 10,083, and I'm going to continue to be bullish. If you look at the S&P 500, the market moved down, but it didn't necessarily move down low enough for me to reach the buy spot. I pushed up the buy spot a little bit today to 27.44, and the trend defining level will continue to be down here. So no change to the outlook. Hopefully we just go down and then we go up. Remember what I said last time. What happened in this episode here is this is December 2018. We have very high volatility, and then the market has some high volatility here as they try to figure things out. But then here you can see how volatility drops and drops and drops, and the market slowly and slowly goes up, because not everything is bad. Coronavirus infections are down significantly. Car makers are opening up factories in Europe and Germany now. Starting from the 20th, smaller businesses can start to operate again, and then in May more things are going to happen. So you got France, you got Germany, you got Spain that are doing things, and I think as well in Italy. Actually no, in Italy I don't remember exactly, but you have those three big countries where things are happening, and we're going towards the right direction. So we'll see what happens. For now though, again, let's just stick with the bullish scenario until proven otherwise. When it turns bearish, I'll promise you guys, I will be the first one to turn bearish. But for now, we're dealing with an uptrend, and I do not want to fight it. And I wouldn't be fighting the governments and central banks either. So, trend is bullish here. Let's take a look at currencies now then. So this is the euro. And the euro, yesterday, I said, look to be bullish above this level. The market though slid straight through support, traded below my trend defining level, and then went a little bit lower. Now the problem here right now is that we're within this triangle. So if you draw a line from March 20th via the April 6th low, and then you have yesterday's low, you can draw that line, and then you have the March 30th high and the April 15th high, and you have that pattern there, oh, that line there. So it's actually quite straightforward. So you can take the base to figure out the take profit, but I prefer like in the midpoint. So if we have that bullish break here, then we can go upwards, and if we have a bearish break, we can probably do something like that. However, the triangle is probably one of the most unreliable patterns to trade, and it also just happens to be one of those patterns that people love to tweet about the most. And this, remember this, in normal life, if you come to a new city and you see a lot of people in one restaurant, and it's probably a good restaurant, good is probably good, food is probably good. If you go to any country and you type in TripAdvisor and you have a place, it has like 400 5-star reviews or 400 4-star reviews, then it's probably a good restaurant. Whereas if you have many 1 or 2 stars, then it's probably a bad restaurant. In normal life, the main view is good. In financial markets, it's bad. You don't necessarily want to align yourself with the narrative that you see online and gurus and stuff like that. I'm not saying all gurus are bad. I mean, I'm good. Now, but the key point is this, is that when you start to see and notice that I sound much like everybody else, then that's probably a sign that I may be off track. I'm not saying either you're going to go with the perma bears that are always bearish, And you can also see that in their analysis, what they post is always negative, it's always negative. And you have people that are always positive, right? You need to be somewhere in the middle, but that main theme sometimes is bad. And the reason for saying this is a triangle, for some reason, as soon as people see a triangle, they're going to put that on Twitter. And again, this is probably one of the most unreliable patterns. Long story short, what should we be doing? On a break to 108.37, maybe you can turn a bit bearish. On a break to 109.91, maybe you can go a bit bullish. But for now, this is going to be messy. You might have a few false starts here before things start to move. Here's GBP versus the USD. And yesterday we said look to buy at 125.02, and just to be bullish about 124.23. It's a bit like the German DAX. We're pretty much at the buy spot now. For now, I'm not going to change this. I'm just going to leave it the way it is. If we take out 24.23, we might go a little bit lower to maybe 22.89. Dollar yen. So dollar yen, let's keep this super simple. A few days ago, we said look to sell up here at 109, and I'm going to continue to be bearish below 109. And I think we can probably go down to 107 and then maybe a little bit lower. Gold markets. So gold prices remain bullish for now. You can clearly see that we are bullish because the market is creating these higher and higher lows. So we don't want to fight the trend. And I think it's all about the risk reward ratio. And I would like to see that little pullback, but people are refusing to push price down now. But I'm going to wait and I'm going to see what happens, because I don't think we need to rush into this. Do you remember a few days ago, a few months ago, when price was going up and up and up, and we said, oh, well, it's not coming down, it's not coming down. We're waiting for that pullback, and then eventually you had that crazy pullback. And then people said, oh, it's not going to go up. But then you had that crazy move to the upside. And then people said, oh, this is going to go to the moon. And then the whole thing collapsed. It's very, very typical. Right now, the price is sticky there. But remember, you have people that bought here from April 13th, which is the beginning of the week. And these people are soon going to start to get a little bit worried, because they're looking at their phones, and you know exactly how it works, because you all have phones and we can all trade on our phones nowadays. They will look at their position. They say, oh, gold, I'm up a little bit now. And then it's like, oh, I'm down now a little bit. And then they get all this emotional. And then when that happens, when they start to see more and more losses, they get more panicking. And I think that's the risk here. That we had quite a decent little move, and people might start to scale out of this one, and that will push price to the downside. Now, this doesn't mean that you should go on and short. I am bullish. It's just not at this level at this time. If the market later, does something like this, where we trade upwards, then that's a different ball game. Maybe if we're trading here, we'll put that as a stop, and then on the way down, I'm looking to buy. But I'm looking to buy on the way down. I don't want to be buying up here right now. All right, final market, and then we're going to answer questions. These are crude oil markets, crude oil prices. Now, this is the May contract. This contract is going to expire in 4 days. And then we're going to trade in the June futures price. And the June futures price is actually around $26 per barrel. So it's a bit of a different level altogether. But let's just focus on this for now. So the market did not trade below 19.18, and we're within that range. And I think as long as trade above this level, we might go up to 22.11. Okay, let's see if you guys have any questions. All right, so in the chat box, we have Chris. Good morning to you. I hope you're doing good. I hope the situation is well in South Africa. I haven't looked at the numbers. I hope it's not too bad. We have Liz as well. Good morning to you. I don't think I have seen you before here, so thank you so much for joining us today. And we have Paul. Hey, good morning. How about the S&P and crude oil prices? Are they correlated? Wider stock market and indices linked to crude oil price movement? There's some correlation. So, like most of the debt, well, not all of the debt, but some of the riskier debt in the U.S. economic system right now is bonds issued to crude oil producers. And they are under heavy pressure because prices are way too low to make production profitable. And you have oil rigs that are down. You have, again, people losing money left, right, and center. So that's why you have some of that correlation. But we could do something more sophisticated than just that. Let's just run a correlation analysis, and there is some at its simplest. Let's keep it super simple. So this is crude oil prices. So you can see that at least from February, they have a very, very, very tight correlation. And then you have this move upwards in stock markets, which I think makes sense, because I think everybody was just way too bearish in March. And I think everybody was sort of pricing in the end of the world sort of scenarios. And they were stocking up on toilet paper and all this food and all of that stuff. And now the markets have gone up. So from this perspective, I think you definitely have some correlation, and maybe this needs to close this gap. So hedge funds, for example, they will go long crude, short stock markets, and look for that gap to narrow. In the bigger picture, there's also some sort of correlation. There's definitely some correlation here. So you have, is this correct? Yeah, it is correct. Let's take a look at the weekly. Okay, so this chart just goes to of the S&P just goes back to 2016. And you can definitely see some correlation here between these markets, and it's positive. Remember as well, crude oil prices. We use crude oil in our factories. We use crude oil to heat our houses. We use crude oil to put into the machines to fly us around the world. We use crude oil to move our Amazon parcels, or for Amazon to deliver our parcels, right? So all of that is linked, and that's why you have this move. Now, it's also quite interesting that sometimes it has the other way, a bit of another effect, because at the same time, high crude oil prices is a bit of a tax on us, because when crude oil prices are very, very high, everything just becomes a bit more expensive, right? Inflation is high, and if inflation is high, central banks would raise interest rates, which will make our mortgages more expensive. So sometimes very low crude oil prices like now is also a boost, and traditionally as well as is seen as a boost, because it just lowers everybody's energy bill. The problem now though is that a lot of these names, especially in the US, which have issued debt, if crude oil prices don't go up, then some of them are going to get in serious trouble. And you have banks that have lent money, you have investors that lend money to them, and that can become an issue. And this is not the first time we talk about this. It was also very talked about, I think, in 2016 and so on and so on. But yeah, what it's telling us now is there's a bit of a gap here. Okay, it's almost 10 o'clock and I will need to leave you soon, but I'm going to see if I can answer some more questions. Chris says, 2,506 cases and 34 deaths in South Africa. Lockdown extended to May 1st. Okay, good. All right, so it's not too bad. Numbers, I think, yeah, it's not too bad. Obviously, you want to look at the growth rate. I want to see what's going to happen in the rest of the world. I think we should be okay. That's what I think, at least. Like the countries like Italy have the populations are old, but also in the UK and places like that. So we do get hit harder, I think. Whereas in many other places where the population is younger, then you'll see less deaths. The people definitely get hit, but you see less deaths. Okay. All right, so I think we're going to wrap things up. Guys, I want to thank so much for joining me today. I will need to leave you now. If you do have any questions for me, let me know. I'm also available on Twitter. That's a very good way of staying, sort of know what I'm up to, because I will usually tweet when I go live. So let me share my Twitter feed with you, or link as well. Guys, don't forget to check this out. So we have actually educational content. You can even see it here, actually. It's super easy. You click here in this little section here, and that takes you to you can learn more about our educational course that we have done. And it's actually quite straightforward. You could buy it for $7.99. This same course, I produced the same course, similar course in 2016. and I was selling it on my own website, and you can still go and buy it there if you wanted to, but I was selling it for £1,000. And why £1,000? Well, because I think realistically, the way people are trading and the people I'm dealing with, £1,000 is something that is easily achievable. Not easily achievable, because I can't promise you anything, right? And it also depends on how much money you're trading with. But I think this is a reasonable price. But what we're doing here, you can actually buy it for $7.99. However, because ATFX, we have a partnership with them, what actually happens here is that you can actually get it for free as long as you have an account with them. So if you put your name and details in here, they will be in touch. As well, you will receive an email with more instructions on how to open up an account. And if you do have any questions about the course, you have my Twitter handle. You can just call me or reach out to me, and maybe we can get on the phone or something, and I can tell you a bit more of what the course is all about. Okay, guys, I would need to leave you now, but I want to thank you so much for watching, and thanks so much for all your support. And I hope to see you guys tomorrow, same time here on the ATFX YouTube channel, but as well on investingcube.com. Thank you, and bye-bye.